Today's video focuses on a question millions of Americans are quietly asking. Headline inflation numbers say prices are cooling. The Federal Reserve says progress is being made. Markets appear optimistic. And yet, everyday Americans feel financially weaker, not stronger. In this video, we will break down why inflation falling does not automatically mean the U.S. economy is healthy, and why the pain many households feel is very real. This is not political. This is not sensational. This is about understanding what is actually happening beneath the surface of the American economy. Number 1. Inflation is down on paper, not in daily life. Inflation numbers are based on averages, not real experiences. Yes, the rate of inflation has slowed compared to its peak, but prices did not fall back to old levels. A grocery bill that jumped from $100 to $140 is not fixed just because inflation slows. Rent that went up 25% does not come back down easily. So when people hear inflation is down, they expect relief. What they get instead is permanently higher prices. This disconnect between statistics and daily spending is the first reason the economy feels broken. Number 2. High interest rates are quietly suffocating growth. To fight inflation, the Federal Reserve raised interest rates aggressively. That strategy slowed inflation, but it also slowed the economy. Mortgages became unaffordable for first-time buyers. Auto loans crossed painful thresholds. Credit card interest rates reached record highs. Small businesses now struggle to borrow. Consumers delay big purchases. Economic activity slows not because people don't want to spend, but because borrowing became expensive overnight. Lower inflation came at the cost of momentum. Number 3. Wages are rising, but purchasing power isn't recovering. Many Americans hear that wages are rising and assume things should feel better. But wage growth has not fully caught up to years of price increases. Healthcare costs, insurance premiums, childcare, and education continue rising faster than income. These expenses matter more than headline inflation numbers. So while paychecks look slightly bigger, what those paychecks can actually buy keeps shrinking. That psychological pressure creates stress, hesitation, and reduced confidence. Key drivers of economic slowdown. Number 4. Consumer debt is filling the gap. Inflation created. To maintain lifestyles, Americans turned to debt. Credit cards became survival tools, not convenience tools. Now, with interest rates high, that debt has become heavier. Minimum payments rise. Savings decline. Financial flexibility disappears. This creates a dangerous loop. People spend less not because they want to save, but because they have no room left to borrow. An economy driven by debt eventually hits a wall. Number 5. The economy is strong at the top, weak at the bottom. Stock markets look healthy. Corporate profits remain strong in many sectors. High-income households are still spending. But the lower and middle segments of the economy tell a different story. These groups feel inflation most directly. They are more sensitive to rent, food, fuel, and interest rates. So while data suggests stability, economic pain is unevenly distributed. This creates the feeling that the economy is fine, just not for most people. Number 6. Inflation cooling doesn't mean economic healing. Inflation slowing is a break, not a repair. It prevents further damage, but it does not undo past harm. Years of rapid price increases changed spending behavior permanently. People became cautious. They delayed life decisions. They avoided risk. Confidence takes longer to rebuild than inflation takes to slow. And without confidence, economies struggle to grow. Number 7. The Federal Reserve is trapped between two risks. If the Fed cuts rates too early, inflation could return. If it holds rates too high for too long, growth could collapse. This uncertainty freezes decision-making across the economy. Businesses hesitate to expand. Consumers hesitate to spend. The result is an economy that looks stable but feels stalled. So why this moment matters? The U.S. economy is not collapsing, but it is not healing either. Inflation falling is only the first chapter. The harder part is restoring affordability, confidence, and long-term stability. Until prices feel manageable, debt feels controllable, and income feels meaningful again, Americans will continue asking the same question. If inflation is down, why does life still feel so expensive? If you value calm, honest breakdowns of the U.S. economy, inflation, and global money trends, subscribe to this channel. More clear analysis is coming.